afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. The Reserve Bank of India's Monetary Policy Committee has cut repo rate by 35 basis points as focus shifts to growth, with FY20 overall target being lowered below the 7% mark. The country's largest public sector lender, SBI, cuts rates by 15 basis points within 2 hours of the RBI announcing a rate cut. The Indian equity markets witnessed some selling pressure in the last half an hour of trade. The Nifty falls below the 10,900 mark, dragged lower by PSU banks and auto stocks. Mahindra & Mahindra's net profit missed analyst estimates in the June quarter. Margins too saw a contraction compared to last year. And Cipla, Hcl Technologies, Tata Steel as well as Adani Ports are some of the other major companies set to report their earnings today. Good afternoon, Neeraj. Every rise is getting sold into now. Last half an hour, once again, there's selling pressure seen.
Yeah, and maybe banks are not really top draw, but they are still leading from the front, down about 0.5%. By the way, in just moments from now, we'll be speaking to Krishna Karwa of Emkay on the sidelines of the Emkay Confluence Conference, which is underway today for the next 3 days. Interesting time to have one. So we'll be talking to Mr. Krishna Karwa in just moments from now. But here's what the markets are doing, down about 0.5%. The Bank Nifty 2 correcting in trade. And I reckon that the market breadth would not be as strong, should be weak in the session today. So keep that at the back of your mind as well. Yesterday, we had a fabulous market breadth, not quite today. In the green, but not quite as good as in yesterday's session. So slightly above 1:1. Quickly, the heat map, and let's show you what's correcting. Indiabulls Real Estate, Indiabulls Housing Finance, that whole Indiabulls group has corrected, down about 12%. Metals have been weak, but Tata Steel in particular, seeing that pain in the session today. It was a top sell call from our experts in the morning show as well, so that is down. Mahindra & Mahindra post-results reaction, Tata Motors down in trade, SBI, iShares, so banks too, select banks at least have given way, the likes of State Bank of India. What's done well? Surprise, surprise, Z Entertainment up about 7%, Yes Bank 3.5%, Cipla result reaction up about 3%, and some of the other defensives, the likes of HUL and Sun Pharma, have come to the fore. Hcl Tech ahead of the numbers, up about 1%. Devina, what are you spotting at the broader end?
Well, most of the stocks, they're seeing some amount of a result reaction. So I want to kickstart first with Bajaj Electricals that reported numbers. Obviously, numbers not comparable because the company had acquired the controlling stake at Nerlab. So just taking a focus on what the stock's doing right now. Aside from that, India Cement came out with a really strong set of numbers. EBITDA was up 55%. Profits was 3.5 times higher this time around. Margins also did fairly well and expanded. So the stock's up about 4%. Lupin just reported its numbers, 303 crores in terms of PAT performance, came in line with street expectations. Stocks on the move, including the likes of a J&K Bank and a central bank. These two stocks have been active since yesterday. Double-digit gains seen on J&K Bank. Then you've got IRB Infra also since morning has been doing well, about 5% higher. Other stocks which are on the move, Vinati Organics post numbers is up about 5%. Numbers came out, I think, a few days ago, and after that the stock has seen a decent move. Questcorp too has piled on gains over the recent past. Heidelberg Cement, in line with what the rest of the cement pack has been doing, is not doing all that badly either. Other volume stocks, Indiabulls group stocks are particularly in focus today. So Indiabulls Real Estate, which is seeing a heavy cut of 16% on 1.5 crore shares that have been traded. Indiabulls Ventures is the other one on heavy volumes. And Diwan Housing Finance, after that big 30% washout yesterday, yet another 8% given up in today's trade. 4 crore shares have been traded there. And lastly, stocks stay their 52-week lows. Parag Milk Foods, 52-week low falls at about 185.35, so just about there. And then you've got National Fertilizers, which is down about 3%, just hovering around its 52-week lows. So that's what you've got in terms of individual stock moves. But what's been happening in the futures and options space, Navneet is going to highlight that for us. Navneet.
Thanks for that, Devina. While yesterday we did see unwinding coming up for Nifty, Bank Nifty futures, and the rise was on account of some bit of short covering that we saw. But currently, Nifty is down, trading around the levels of 10,913 and 5% higher when it comes to the open interest for the futures. We'll have Bank Nifty, which has been in focus due to the monetary policy, 6% higher for Bank Nifty in terms of open interest, and 0.5% cuts seen. It's now trading below the 28,000 mark. India Volatility Index, which cooled off nearly 2% yesterday, is not doing too much in today's session, but that's the open interest distribution for you for tomorrow's expiry. By the way, VIX has gone up with markets falling in last half an hour. We have seen rise in VIX, 16.3 11.6 is the level. In terms of open interest concentration, now it is at the 11,000 call. Now this has moved from 11,200 to 11,000 base. Once again, seems to be moving lower. And on the put side, it is at the 10,800 strike. In today's session particularly, we've seen call writing coming back at the 11,000 strike, which has added nearly 17 lakh shares. And even out of the money strike like 11,100, that's seen addition of about 16 lakh shares. On the put side, some bit of addition coming by for 10,800 as well as the 10,750 strike have seen addition. What levels to watch out? Still, I'll say on the downside, yesterday's low of about 10,813 will be in focus at least till the time index is trading around the 10,900 mark. Stock futures, Indiabulls Housing, your top Nifty loser, your top F&O loser for the day, reacting negatively to the numbers which were not good. Asset quality deteriorated sequentially. Loan book was down 10% and the stocks down about 45% so far this year. Futures indicating heavy shorting 12% lower. Open interest up about 35% for this stock. Z is the other one which has snapped the 7-day fall in today's trade. The stock's trading with gains of 6 to 7% today. However, it's still a beaten down counter, so it is trading below all its key moving averages, but some respite after latest fall. 7% higher, no major build-up seen at least on the futures side. Cummins is the other one which came out with its numbers today. The stock's fallen in high volumes just post the numbers, so watch out for that one. Short positions definitely seen for this counter on the future side as there was rise seen post the numbers in terms of OI addition.
Let's begin with the top market voice. Joining us from the Emkay Confluence 2019 conference, which is underway, is Mr. Krishna Karwa, the Managing Director of Emkay Global Financial Services. Mr. Karwa, good having you. Thanks so much for joining in. Neeraj here. Good afternoon. It's an interesting time to have a conference on the day of the policy as well. What's been the top theme in terms of what your clients are expecting from you as a house and from the corporates at the conference?
See, as far as the clients are concerned, I think currently they require a lot of hand-holding in terms of obviously the economy seems to be under pressure and also corporate performance is under pressure. But yes, what they require is deeper insights into the businesses that they own and in terms of how things can become better. So they're requiring more in-depth research, that's what we have been providing, and also how things can change for the better. As far as corporates are concerned, the mood is obviously kind of sombre, in terms of we have seen how the performances of most of the corporates have been challenged, and also this concerns on liquidity, growth, domestic growth, and also what's happening on the global front. So there are too many clouds which are there currently, and all are looking for signals of when things will become better. So every corporates are very, very circumspect in terms of giving their prognosis for going forward, for the business going forward. But some of the corporates, yes, where competition has weakened, specifically in the case of some of the NBFCs, where there are only very few corporates standing in terms of ability to lend. I think they are positive in terms of whatever market business remains. I think they are able to gain a major share. So yes, corporates are kind of cautious in terms of the immediate visibility, and investors are obviously looking for signals of, okay, business is weak as of now, but is it in valuations? I mean, are the stock prices reflecting the trough valuation? Maybe there is some more time correction, but is the price correction done? That's what they're trying to evaluate.
I guess the house view is that maybe there is some more pain. Suvir and Sunil were here the other day and they were talking about the note that they've put out, which is one thing. To your mind, the experience that you have of seeing so many cycles, do you think we are at the fag end of the painful space, or is it difficult to predict that right now?
See, I would like to split it in two ways. One is the sentiment and the other is the actual ground reality. So in terms of sentiment, maybe a few announcements by the government in the immediate future. The sentiment can possibly change, and that could also get reflected in terms of kind of short covering, etc. And there could be a bump up on the indices of stocks. But in terms of ground reality, in terms of business sentiment, business itself improving, I think once your cycle breaks, then to restart the whole cycle and the positive impact to come into the system will take a few more quarters. So effectively, in terms of actual numbers getting reflected, improved numbers in corporate performance, I think that's a few quarters away, maybe the last quarter of the current financial year or maybe from the first quarter next year. So that's the way it stands in terms of actual numbers versus sentiment.
Mr. Karwa, good afternoon. So what would the approach be now in a market condition like this? I mean, most talk about how staggering our investments right now, nibbling into the markets is probably a more prudent approach rather than just sitting on cash and missing the bus altogether in case of a turnaround. What would you be advising?
Honestly speaking, sometimes it will be very surprising that when the markets are not doing well, people or investors seek in terms of advice. But I think the principles remain the same whether you are in a bull market or the bear market, which are basically four things, which is that one is look at the management, their capabilities, the other is the business, third is the valuation. I think these are the three important things that we need to look at. But in the current environment, yes, after having seen the massacre in many of the stocks where companies have been leveraged or the promoters have been leveraged, it makes sense to just stay invested or to look to invest in corporates with strong balance sheets, decent businesses, decent valuations, and most important, top-class managements. Because if the slowdown persists, if the global headwinds become much more stronger, then it is the ability of these managements which have proven track record to be able to sustain in these tough times. So so the simple recommendation is that focus on the management, business and the valuations. I think half of the job will be done.
And that's probably a directive towards mainly your large cap names on the index, those top 10 weighted stocks on the index. But then doesn't that, probably increase the threat of further polarization that we've any which ways been seen on the index?
I don't agree that only large cap stocks have got top class management. I think across the market caps there are very good managements and businesses and balance sheets. I think you should be irrespective of the market caps. You should be looking to invest in these kind of companies. As far as polarization is concerned, so yes, there has been a massive polarization which we have already seen. In terms of Nifty itself, probably the top 10 stocks have performed very well in the last few years, and the balance stocks have corrected sharply. So there is a total disconnect within the Nifty itself. And yes, small caps, mid caps, the indices have corrected much more sharply than what has happened to the main index. So that kind of polarization has possibly already happened, and rightly so. I think in terms of companies which have been performing well, run very well in terms of corporate governance, etc., they will continue to do well in all kinds of market environment, and more so in this kind of an uncertain environment where people who want to stay invested in equity would tend to move towards further invest in these kind of companies which they know that will survive the tough times and come out winners. So this polarization is there, and it will be there only in massive bull markets, etc., where all kinds of stocks get similar kind of valuations. But this differentiation is good, and it will continue to remain.
All right, so you don't see this polarization contracting, or you don't see it waning off. You see it still being an important function of the market, at least till this uncertain environment persists.
Absolutely. I think it will, in fact, for the coming few years, etc. I mean, we have seen in the bull market of the last few years, before maybe 18, that you had so many of the small mid-cap segments getting valued at very high valuations, maybe at par with the industry leaders, or at par or even at premium to the large caps. I think that was an aberration of the excessive liquidity and exuberance in the system. And after that, we have seen the kind of deep corrections. Many of the stocks of poor managements with leverage balance sheets or promoter leverage, etc., being possibly at 10% of their peak valuations. I think public memory will remember, people will remember in the at least next 2, 3, 4 years that if they ignore these basics, then the kind of value destruction that can happen can be phenomenal. So at least in the immediate future, for the next few years, I believe that whether it be individual investors or whether it be institutional investors, they will tend to gravitate towards strong businesses. Again, I'm repeating, with strong businesses, strong managements and strong balance sheets. there is no let go of that. So this polarization, I think, is there to stay.
Okay. Mr. Karwa, good afternoon. Focusing on the fundamentals, EPS cuts have already started to come after some of the numbers which have already come for the June quarter. If you go by the commentary by a lot of these managements, they are sounding pretty cautious even for the coming quarters. Do you see more earnings risk in the remainder of this financial year?
Definitely. I think when we started the year, probably we were talking of around 20-25% kind of an earning growth on the Nifty components. But if you look at the first quarter so far, whatever numbers have been announced, I think the growth has not been more than 5%. So the numbers are not so heartening, and out of that 20-25% growth, also maybe 2 or 3 stocks were the one which accounted for 2/3 of the growth. So there is definitely, there is the earnings cut overall in the Nifty itself as we move forward, and individual stocks also there could be possibly, because earnings outlook, the growth outlook itself is kind of hazy for many of the companies, whether it be domestic facing or whether it be global facing. I think and now with the trade war between China and the US the further escalating, I think there could be challenges on even the global facing companies too. So there will be more pain as far as the corporate performance is concerned, or in terms of the analyst expectations. There will be, that is a distinct possibility. So I think we should be prepared for that. But I think markets have anticipated that, and in terms of the broad market, there has been deep correction which has already taken place. So there could be a possibility that despite poor numbers in the coming quarter, your stocks may not correct further. Maybe they have reached some kind of a base valuation based on the intrinsic value that these companies possess. So that could be there could be a disconnect, poor numbers, and still the stock prices hold out.
Okay, and keeping in mind the current scenario, as you rightly mentioned, globally also trade war tensions are only increasing. Are you seeing any sort of sector rotation that's taking place, considering Nifty is already corrected 1,000 points from the top? Any favored sector now at current levels where you see more value?
See, honestly speaking, from not from a sectoral perspective, but where I see value across the market is that today, if you look at the markets across market caps, probably 250, 300 odd companies are possibly at, say, more than 5% dividend yield, between 5 to 8% dividend yield. Now that's a phenomenal number in terms of the yields that dividend yield that these companies are giving versus the current interest rate environment. So if investors are doubtful of recovery, but are comfortable that these companies are in a position to maintain this kind of dividend yield, then that's a huge pocket of value stocks which are available at decent dividend yield, which can protect you in terms of your overall returns from your portfolio should the environment not be so good, and if the corporate performance continues to be weak. So instead of sector, I would look at the valuations and the kind of dividend yield that many of these decent companies are giving, and if fresh investment need to be made in a cautious way, then high dividend yield stocks could be a way to look at.
Okay, Mr. Karwa, we'll leave it at that note. Thanks a lot for joining us today and taking us through your views on the markets.
Thank you very much.
Okay, and talking about the earnings, Pidilite posted strong margin growth in the June quarter, although the revenue growth slipped to a 6-quarter low. Benign crude oil prices helped in keeping the cost also low for the quarter gone by. But how was the volume growth outlook and amid consumption slowdown? Yash Upadhyay spoke to the executive director of the company, Apurva Parekh. Listen in.
We see some challenging demand scenario. However, in this challenging demand scenario, we believe we have delivered a resilient performance with our consumer and bazaar product growing by about 6% in volume and industrial products growing by about 12% in volume. We saw faster growth in smaller towns and rural areas. As far as going forward, we continue to remain cautiously optimistic. However, I would not like to give out any growth projections.
Okay. So there have been multiple brokerage reports citing a shift in the consumer preference to branded products in the home improvement segment, and even the customers willing to pay a premium for the branded products. Has this whole play of the unorganized to organized, how has it played out, and do you see that aiding volumes further? Because if that is really happening on the ground, but given the kind of slowdown that we've seen in the real estate and the automotive segment, do you see these factors helping push the volumes further?
See, in our categories, branded product always had a good share and position, and that has always helped us. And if there is a greater shift in that direction, it would certainly help a stronger player like us. We have good market share in most of the product categories that we operate in, and any shift of this nature would certainly benefit us. But however, it's very difficult to sort of correlate our growth to these factors in a short term. We will have to wait and see how this trend develops further.
But are you witnessing such a trend actually playing out at the ground level? Are you seeing? Do you see this happening?
To some level, it is happening, and that is helping the growth of some of our premium products as well. So to some factors, we do see this trend happening, but again, very difficult to attribute that how much of that is impacting our overall growth rate.
Okay.
But however, if this trend continues to happen or develops further, it would be surely very beneficial to us.
Absolutely, but what's also beneficial for the industry is the fact that crude oil prices, they have come off. In fact, they are down more than 19% from its peak of almost $74 per barrel in the last quarter, and that has aided your margins too, because most of the raw material prices, they are linked to the crude and crude derivatives, sir. Could you help us understand what has been the average VAM prices in the first quarter versus the corresponding quarter?
So average VAM prices during the first quarter were below $1,000, and they continue to decline, where now currently the new spot prices of VAM are below $900. So certainly the benign crude and raw material prices have helped us expand our gross margins, and the current trend continues to be favorable.
Right. Because of the easing of the raw material prices, we've seen that the margins too have come in substantially higher than the expectation, or almost 22% in the first quarter, which is also the highest in the last 5 quarters that we've seen for the company. But there were minor factors which held back the margin expansion further, be it your higher employee costs or marginally higher other expenses as well. Do you see that going forward with the raw material prices too being lower, some cost control would aid the margins, and do you expect the margins to grow further from here, or do you see a cap at the margins around the 22.5% mark?
See, as we have always stated, that we like to operate in a margin band of about 20 to 24%. So that is what we call as our comfort zone, and we would like our EBITDA margin to be in that range. That is what we aim for. However, cost control is a separate factor by itself. I would not like to link it to the crude prices. We need to always continue to work towards having the most optimum cost structure regardless of the crude prices. So in that regard, we continue to take various initiatives to optimize our cost structure. Our staff cost has been a bit higher. One of the reasons for this is that we have a unique business model with number of product categories and number of niche businesses. And in addition to that, we have been increasing our staff cost to prepare for sustained higher growth long term. So these have been couple of factors which have resulted into higher staff cost growth. However, as a company, we are taking several initiatives to optimize our cost structure further.
Okay. Sir, also in the first quarter, we've seen the industrial products business, outpacing in terms of volume growth. The consumer and bazaar segment are 12% volume growth in the industrial products business. What have been the factors at play for this?
So industrial product, if you see, we have always been working towards improving our product and customer mix. So this has been one of the factor in improvement of growth rate. In addition to that, also some of our industrial businesses are benefiting, from the trend of business moving away from China to other countries. So this has also helped us, where export of some of our product categories have gone up sharply during the first quarter. However, I would urge you not to look industrial business from quarter to quarter. We need to have a little longer sort of view on the industrial business. But we have seen a very favorable trend during the first quarter.
Okay, and so lastly, a word on the pricing. We've seen the raw material price being favorable and the focus being on the margins, being in a band of 22 to 24%. We are at the lower band currently at 22%. Do you see the need to take further price hikes, or would prices remain stable going forward?
As I mentioned to you before, prices of some products like VAM have further reduced during the first quarter, and hence in near future we do not see any need for increasing our prices. Also during the first quarter we took some pricing action in terms of increasing discount or reducing pricing of some of our products because the raw material cost had sharply corrected. So in short term, to answer your question, we do not expect any further increases in prices of most of our products.
Okay, so then, sir, in that case, how do you expect to achieve the 24% margin in that case?
No, as I said, we like to operate in a margin band of 22 to 24%, and one of the key factor for that is to have good volume and value sales growth. So our primary focus is to achieve consistent double-digit volume growth, and then to operate in a certain gross margin band which would allow us to achieve our EBITDA margin in the band in which we are comfortable, which is 22 to 24%. So
Okay.
That is what our focus would be, primarily to drive consistent double-digit volume growth while operating in a comfortable gross margin band.
Okay, so I basically thought that probably you would be coming out with new products in some of your in some of the segments like the consumer and bazaar segment, which would probably drive that growth, which would be some high margin products. But any clarity with respect to any new product launches that the company has in the pipeline?
We continue to bring out new products. In most of our product categories, we have new products which have either been recently launched or will be launched in near future. So new product introduction is a continuous process, but new products do take a certain amount of time to contribute meaningfully to top line and bottom line. So I would not link the introduction of new products to achieving certain EBITDA margin target. However, new product is an important focus area for Pidilite, and we continue to innovate and bring out new products.
That's the management of Pidilite talking about their quarterly performance. And another company that reported its numbers saw a drop in its net profit by 64% is Bajaj Electricals compared to the same period last year, that is. And that was due to a higher other income component and a 36% drop in its other income. To discuss the quarter gone by, we're now joined by the CFO of the company, Mr. Anant Purandare. Anant, thanks very much for taking on the time. Obviously, we're not going to be able to compare it on a like-to-like basis because of the fact that, the company had acquired the controlling stake in Rbl Appliances in this quarter. But what was the key highlight for you during this period?
The key highlights, I can say this is the mixed kind of a performance presented by the company. On the consumer durable side, obviously the performance is far better. We grew by 32.7%, 31.7%, almost 32%. However, our top line growth in case of EPC is down by around 5%. See, the reasons is obviously we had in consumer durable appliances and fans are performing better as compared to lighting. Growth is relatively low. However, in case of EPC, our top line is not coming because as everybody know, last year we were executing the orders for the UP state, and whereby our top line is increased substantially in the last year. However, that UP project scope is substantially now reduced, and we are not really booked any new orders during the financial year. That's why the overall EPC top line is coming down. As against, there is an increase in overheads, which is impacting the margins of the EPC. Going forward, as a management, we have decided to focus on EPC only on calibrated basis and take a contract with the better margin, whereby our order book is also relatively shrunk.
To the tune of how much? In terms of, you're saying that your EPC order book is any which ways at a lower starting point for the year. So what kind of focus do you have in terms of the kind of orders that you're looking for, and the margins that you said are going to be at a slightly better rate? What would those margins look like? Would they be more than the current 6%?
In case of order book, the current order book is 1,556 crores, which is comprises of 496 crores for transmission line tower business, 916 crores is for power distribution. It is also includes part of our UP projects which balance to be executed, and 140 crores, 44 crores is for illumination project. When I mention that the margins, better margin, means I am talking of the first level at contribution level. However, as we increase our EPC business last year, the increased overheads, they are going to take away a little bit from the profit of EPC business. So at EBIT level, margins may not be better as compared to the previous period.
Are you going to continue to remain focused in terms of shoring up your consumer product revenues, and to what extent do you see it growing this year?
As I said, in the first quarter, our growth for appliances of around 36.6%, fans we grew by 40%, and looking at our distribution, new distribution model, which is obviously a better penetration, and now with the support of new R&D center which is set up, we are refreshing our lot of SKUs to deepen our product portfolio. I think with this strategy plus focusing on little bit of brand building, we should be able to grow better.
As in, you've grown at 36%. What would your full year forecast be?
Obviously, it is a forward-looking statement. I can't give the forecast, but obviously it depends upon how the market and our strategy works.
So just a word on your receivables. You highlighted the EPC project business is impacted because of the big UP project, and I believe in the fourth quarter your receivables went higher due to this project. What's the update on that?
Receivables remain more or less in the same range. There are collection coming in as we are doing the billing. However, there is a lag in getting the payments. So we are expecting that once the money is released from the central government, we'll get our receivables. But as of date, yes, the dates are more or less in the same range.
All right, so we leave it at that. Thank you so very much for joining us this afternoon. That is the management of Bajaj Electricals company admitting that it's a sort of a mixed bag performance for them, but they're hoping to make sure that the consumer business remains to be scaling up while taking a slightly more cautious approach in the EPC business.
Well, on to other conversations. ENIL's revenue met estimates in the June quarter, supported by its non-radio business, but high operational expenses dented the bottom line compared to what was estimated. To help us decode the factors at play in the quarter gone by and maybe give us a sense of what the quarter ahead could look like, we joined on the show by the MD and CEO Prashant Pandey and Group CFO N. Subramanian. Thanks so much, gentlemen, for joining in. Is it a reflection of the slowing economy and maybe not, because your top line growth still kind of meandered around what the expectations were, but operational expenses did take a bit of a toll?
Well, clearly the economy has slowed down. There's no doubt about it, which is why our core business, which is the radio business, has grown by only 1%. And because our costs have grown by about 6%, therefore you see the impact on the EBITDA, right? So let me just tell you what's happening in the market. In the market, what's happening is that advertisers are demanding a lot more from media companies. And what they're demanding is results. And they want solutions. They want ideas. right? And they don't want to just buy plain vanilla inventory or whatever. So that's what we are seeing, that our solution business, which actually captures exactly that, which is providing ideas to clients, is doing very well. And we also see a pipeline ahead which is pretty strong. And therefore, I believe that through the year, while the core radio business may remain muted because of the sluggish environment, I think the solutions business will provide us that uplift.
Would that be what the future could throw as well then, Prashant? Because once customers, it's like opium, right? Once customers get used to a particular kind of thing and solutions, result-oriented solutions becoming the order of the day, the plain vanilla bread and butter business for media at large, not just for you, because if you are going through this, the smaller players must be going through even tougher times.
Well, we are encouraging it, because at the end of the day, the advertiser has to get more bang for his buck. And what's the point in buying media which doesn't deliver, right? And
so then what happens to that radio business growth is the question.
The radio business growth is important, of course, because it will support the requirements of any multimedia campaign that a client does, right? Remember, radio is never used alone. It is always used in combination with the media. And that part of the business is going to remain, right? It's always going to remain. I think 50% of our business in future will remain core radio, right? It's today about 65-70%. But it will witness headwinds whenever the economy is slow, and will experience a faster growth whenever the economy recovers. But the solutions business is in our hands to control. If we are able to grow it faster, we can grow it faster through bad times and good times.
Okay. Mr. Subramaniam, I'll come to you. 133 crore were the revenues, and I think this was boosted because of the non-radio business. What's the breakup between radio and non-radio?
Non-radio is 28%.
Okay.
And also on the earlier question on operating expenses, there are a couple of components there. You know, when the share of a solutions business increases, the operating expenses does go up. Okay?
Right.
Because there are some variable components there. There is also a second factor there, because this year we have 21 stations, 21 of our batch 2 stations operational, all of them. Last year we had very few. So that has also increased expenses. As you know, fixed expenses tends to be very high in radio. Third is, you know, if you look at the depreciation component that has gone up, there is a new standard, the Ind AS 116 standard, that has also resulted in an increase in depreciation, and also the consequent interest costs associated. We don't have borrowings, but since the lease liability will have to be restated, there is an interest cost related to that. So that has sort of reduced the aggregate PAT by 1.6 crores on a standalone basis and 2.4 crores on a consolidated basis.
Okay, so radio is not growing, and there's a growth seen in non-radio. And correct me if I'm wrong, I think the margins from the non-radio seems to be lesser than the radio business. What does this do to the entire operating margins for the year then?
While the gross margins in the solutions business is certainly lower than radio, what we have to see is at an EBITDA level, this quarter we have reported an 18% EBITDA margin on our solutions business. So we are seeing an uptick in the margins in our solutions business. As the share of non-radio goes up, the overall EBITDA margin will come down. But what is important is absolute EBITDA. And that will certainly grow as the non-FCT business starts going at a faster pace. We had close to 42% growth in our non-FCT business in the current quarter. With that sort of a growth rate, you will certainly see an improvement in absolute EBITDA.
You've also given a guidance of reporting highest ever absolute EBITDA for this financial year. Are you on track for that?
So we'll have to see how the ad outlook is in the second half. We have very little control over that, but what we are focused on is operational efficiencies and developing solutions for our clients.
Okay, so let's talk about the turn of the focus now. Non-FCT business, you know, according to most brokerages, that has been a little bit of an apprehensive point. They've actually spoken about EV per EBITDA coming off because of the focus on this particular business. Do you feel that this an additional focus here and increasing spends on this particular business could be slightly more dilutive for you going forward?
But you know, first let me explain to you what this entire solutions business really is about, right? The solutions business is exactly, you know, what I was saying, Neeraj, earlier, that it is actually getting into areas where radio normally would not find a place. I have to give an example. We had a client in one of the cities which was into, they build road roller machines. Now, road roller machines have nothing to do with radio advertising or print advertising or anything of that sort, right? But where we got into is in the entertainment space, and we provided a service to them which was about entertaining their crowd of people who had come, and we make money out of that. So the solution business for us, actually what it means is that we will no longer be restricted by the size of radio in the overall advertising pie, which is anywhere between 4 and 5%, right? And that number is not growing very fast. So we are going beyond that 4 or 5% boundary that unnecessarily kind of held radio companies in, and going beyond that.
Sure, but you take some long gestation periods, manpower intensive, marketing spend intensive. You're going to be giving all of that.
And the way we look at it is that it is a competitive barrier, because if you notice, there's not a single other radio company which does this to the level that we do it, or the kind of products that we offer. Now, you asked a question about broker. You raised a point about brokerages, and I'm not actually surprised, because there is no ready reference for them to look at this particular business, right? So if you look
break it down for them, explain.
Right. So let's say if you look at the US market, which then becomes easy for them to refer to, radio companies there have basically diversified from radio into digital, right? Now that's a very common thing. You'd readily understand it. There are online radios, and then they have websites, and they give banner advertising, and they do all of that kind of thing. But that's still a very small piece of what we do. The solution, that it's the same concept, but it goes way beyond what even American radio stations are offering. It's the first time I think anybody in the world is taking a radio company and moving it so strongly into a solution space, right? So that's the reason why brokerages are not immediately understanding. We are, of course, trying and talking to them and explaining more and more about it. But like I said, it's a huge competitive advantage. It's not an easy business to do. We have been doing it for literally 10 years now, possibly more, and we have learned some of the skills over there. Long way to go still, but I think that's a huge competitive advantage.
And also to supplement what Prashant said, it's not an either-or game. If you look at this quarter, our estimates tell us that the radio industry has grown by 3%, whereas our operating revenue has grown at 10%. So, the solutions business is actually a delta, right? If we had just done radio, then we would be about 3 to 4%. We managed to get a 10% growth rate on the back of our solutions business. So it's actually a delta. It doesn't mean that we will not do radio. Radio will continue to grow at 8, 10, 12% depending upon the economy. The solutions business is really a delta on top of the radio business.
Okay. One final question, and that is on the basis of what the Reserve Bank of India also had to say. The growth numbers for Q4 are a lot more optimistic, but they are concerned about growth. If that is indeed the course of what this year at least, and we can't really think too much far out, but if this year is going to be subdued, would it be safe to assume that the radio business growth for this year would largely mirror what Q1 has shown?
Actually, on the contrary, it's a known fact that whenever the economy does poorly, radio does very well, and we're seeing that in the auto sector. Let me just give you an example. Auto sector is fully demolished, I mean pretty much so, right? Their spends on television, print has all gone. But you know, the Mirchi business on auto sector has boomed in the first quarter. And the reason is very simple, because dealers are trying to liquidate stocks, and what better medium than radio to use for doing that thing. So actually we are optimistic about the auto sector this year, and that's strange, right? And we saw the same thing happen, I think, between FY13 and FY16, around, you know, the time after FY12 when things had gone down again. Radio was growing faster than television and print, right? So I think this year will generally tend to be weak, but I think certain sectors will still do well for radio.
But you also had support in the first quarter because of elections.
Yes.
That's not going to be there in the second quarter now. So can one expect that the second quarter will be subdued?
I think on core radio, second quarter will be worse than the first quarter, because you're very right that the April and May months saw a lot of advertising coming from political parties, and this time it was a particularly good season for us. So yes, in July, August, September, I expect that the core radio business will be worse off than in the first quarter.
Okay.
We'll leave it at that, gentlemen. All the best, and all the best with this new branching out. I mean, not quite new, but yeah. In the teething space, so to say, but all the best for that.
Thank you.
Thank you.
Well, that's ENIL, and hoping for a better performance, maybe in the second half, if not immediately in Q2. By the way, Adani Ports numbers out on your screen as well. Profit at about 1,020, so not doing all that bad compared to the estimates. Maybe, just maybe, the stock too could be reacting. No, not quite. About 2.5% lower in trade. We'll try and get more details about Adani Ports, but the net profit numbers seem okay.
Right, that's the stock there, down about 2%, and I actually want to see whether we have any more details on the overall numbers. Revenues have come in at 2,790 crores. Estimates were 2,998 odd crores. We have some details with regards to the cargo throughput. Volumes are up about 18 odd %. Cargo volumes for Q1. They have a one-time loss of about 58 odd crores in Q1. That's what you've got, and the revenues have come in at about 2,790 odd crores. So not a major change there in terms of at least the pricing activity. 370 is where that stock's currently trading at, 1,020 in terms of the profit numbers. But bringing in our market experts then, Manav Chopra of Indiabulls Ventures is joining us on the show, along with him Ruchit Jain of Angel Broking is also there with us. Gentlemen, very good afternoon to the both of you. Yesterday saw a blip in the down cycle that we've been seeing over the last few days. Some excitement that crept in, though towards the end we didn't manage to hold the highs of the day, and today yet again looks like a weak day. But how crucial is it for us to hold the 10,900 mark? Ruchit, I'll come to you first.
Yeah, hi, very good afternoon to everyone. Well, in fact, if we see last three trading sessions, 10,850 to 10,800 range has gained a decent support, and we have seen that the index has been bouncing higher from the 10,800, 850 range. Now, what is different in today's trading session, that recently when the markets had corrected, on every pullback move, when the markets were going higher for one or two trading sessions, the market breadth used to be negative. Now, after this support of around 10,000, 10,850, today you can see when the benchmark index is a negative, the overall market breadth is positive. So this is something different that we have not seen in the recent correction, and this indicates that probably I think this support of 10,800 to 850 should be held on. But on the higher side, if you look at the options data of tomorrow's expiry, 11,000 call option has the highest amount of open interest. So I think 10,850 to 11,000, this would be the range maybe for next one or two trading sessions. So at current levels, we are advising our clients that in case we get a dip around 10,850, and then around 10,850, then use that dip as buying opportunity with strict stop loss below day before yesterday's low of 10,780, and expect targets around 11,000 first. And in case we manage to cross this 11,000 mark, maybe post tomorrow's expiry, then we could see levels at around 11,120.
Okay, that's the technical view coming in on Nifty, Bank Nifty. Manav, what about you at current levels of 10,900 thereabouts? Would you advise taking any bet on Nifty?
See, at the moment, we are at quite oversold levels, so definitely initiating fresh shorts is something that we are not recommending to our clients. This is definitely a time that one needs to be selective in terms of taking some stock specific approach. But when we're talking about the Nifty index, as long as the Nifty index is trading below 11,000, we will continue to see this kind of a choppiness. So ideally we need to see the Nifty index to break and close above 11,000 at least for a couple of trading sessions, which would then provide that kind of a momentum for at least some sort of a short covering or a retracement rally. Most of the looking at this oscillators, they are definitely in deep oversold levels, but they can remain to be in oversold for some more sessions. But that doesn't rule out for a case that we can't see some more declines, which could be possible if the support is breached. So in such a scenario, I think yes, there is an important support at 10,750, 800, which is an important cushion, and some sort of a pullback rally is possible. But in such a scenario, I think it's better to be a little conservative than to be a little more aggressive. So we are actually waiting for a breakout of at least yesterday's highs and a closing above that for any short-term confirmation. Similarly, for the Bank Nifty, the important resistance is at 28,100, and only above that we would be actually be entering for any short-term trading opportunity into the markets, at least for the near-term perspective.
Okay, every pullback actually seems to be getting sold into, and yesterday's high, remember, was somewhere about 11,015 on Nifty. It's difficult to take a view or a fresh bet on Nifty or on Bank Nifty, Ruchit, but in terms of individual stocks for this afternoon, what are you recommending?
So I have two buy recommendations in the option segment, and the prime criteria for selection of stocks has been, I have selected those stocks which have not corrected in the recent correction. So stocks which have been showing some outperformance in last 2 or 3 weeks. Now I have two buy recommendations. Those stocks, one is a buy call in Sun Pharma. If you look at the Nifty Pharma index, then in last 1.5 months, 7,750 to 7,800 has acted as a very strong support in the index. And if you look at RSI on the index, index, then RSI has been showing a positive divergence in this range. So I think pharma index should show some decent pullback move from current levels. And amongst the index heavyweights, if you look at Sun Pharma, then in spite of the broader market showing correction in last 2 or 3 weeks post budget, Sun Pharma has not corrected and has formed a support now around 408, 410 kind of levels. So we expect the stock to test its 200-day moving average, which is around 440, 445. The 440 call option could be bought at current levels with stop loss below, which is right now quoting around 8 rupees. One can buy with stop loss below 1.75, expecting target around 20 rupees. And amongst the other outperformers, Dabur is the second name on the buy list. We have seen that the stock has given a breakout yesterday from a consolidation, and the 200 DMA as well as the 20 EMA, which is a long-term as well as the short-term moving average, have been holding on since last few days. So we expect this outperformance to continue. 440 call option of Dabur, which is quoting around 8 rupees, can be bought with stop below 2.75, expecting target around 20 rupees.
Okay, Manav, what about you? Your individual stock bets?
Yes, I have 2 buy calls. My first call is buy on Tata Global. The prices have been an outperformer in the markets, and this stock has also managed to close above its previous week's highs. If you see the weekly and the monthly charts, the stock is actually a bullish uptrend, and any short-term corrective decline is ideally a good chance to enter into a long positions. Recently, the prices did break out in such markets from its important channel resistance, which is giving some more comforting, and also the momentum is positive. So, since we are at such oversold levels, I think this stock will definitely provide a good cushion and that kind of an outperformance. So 255 is a stop loss for Tata Global on the lower side, and we expect an upside target of close to 300. My second buy call will be on Tata Power. In fact, this is a contra bet in this scenario, and this stock overall has been a big time underperformer, but most importantly, it has a very important weekly and monthly support of close to 55 and 60 zone, and we've seen in the past that the stock has actually seen a good bounce of at least 8 to 10% from these support levels. Also looking at the overall structure, the stock is kind of forming a base, and since past couple of trading session, it is holding on to its important support. So a good risk reward ratio, at least for a retracement rally into this, stop loss of 55 for Tata Power on the lower side for an upside target of 68.
Okay, got that. Just a few stocks then. Indiabulls Real Estate is now down about 16%. Indiabulls Housing is down about 11.5%. Diwan Housing is down 10% after that big 30% spike in yesterday's session. Sugar as a pocket, which was active yesterday, seems to be dipping in today's trades. Balrampur Chini, Sri Renuka, Praj Industries, all of these names look weak. Parag Milk Foods at its 52-week low. In fact, made a new 52-week low today at 184. And an Rbl Bank stands at about 364, which is down a massive 8%. Ruchit, what would you do with Indiabulls Housing now?
The broader trend since last few months for the stock has been negative, and if we look at the positional charts after September, October 2018, every pullback move in the stock has been sold into, and the stock has not managed to cross its 200-day moving average even once. Now in today's trading session, the previous swing low, which was around 475, has also been breached, and if we look at the volumes, then the volumes are also higher than the average. And usually whenever we see selling pressure with higher volumes, then those stocks tend to underperform in short to medium term. So there are no positive signs in the stock. I think the correction could extend further, and now on immediate basis 520 should be seen as the resistance.
Okay, that's the technical view coming in on Indiabulls Housing, which is your top loser on the Nifty owing to the numbers. Remember, asset quality weakened sequentially, but one stock which has bounced back today, and that's Z. That's your top gainer on Nifty, up about 7%. It's also snapped its 7-day fall that we've seen in the recent past, 6.5% higher at 332. Manav, has it bottomed out with today's 7% move? Would you take any fresh bet now?
No, in fact, the stock still remains to be weak. The overall structure, if you're looking at on the weekly perspective, is still on the downside. The prices are still in a downtrend and trading below its important long-term averages and key support zone. So at the moment, I believe this is just a short-term pullback rally. So on the upside, 345, 350 are the important resistance clusters, and I don't see it breaking it on the upside until unless there is a very strong momentum or a volume breakout that takes place. So till then, it's time to be cautious into this stock, and I still feel that one should not take any trading position into this unless it actually closes above 345 on the upside.
Okay, we're talking about weaker hands. I mean, Z is of course an exception, but otherwise a lot of hands looking weak. So M&M is looking wobbly. Tata Motors is looking wobbly, heading towards that 2-digit mark. By the way, it's Tata Motors. It's 118 now. This would be fresh 52-week lows. But that one stock that is really corrected at the broader end of the spectrum is Rbl Bank. That stock is down 8% now, 363. Now, whether it's the market pricing in a lot of disturbance with regards to its unsecured book in the quarters ahead, or something else, I don't know, but yes, 7.95 or 8% lower at 363. When the results came out, the day before the results, Rbl Bank was 603 rupees. From there, it is down to 363. It's not halved, but almost 40% lower. 7 days, 19%. The 1 month chart from that peak on the results day or around the result week will show you a downtick. Yes, about 42%. That's a severe gash. And to think of it that on the day of the results, the stock after the results came out actually went up in trade, and then when the commentary came in is when the stock started correcting, and since then has not been able to hold out. So we've seen this happening to a bunch of banks. DCB numbers were banked, the stock
actually
Federal was okay, the numbers.
Again, for the commentary,
yeah.
And Federal was trading at about
106.
107 odd.
Currently on 85.
And then from there to currently at 85, that's also a sharp drop. So for most of these private sector banks, actually, the trend has been pretty similar. I think Cipla numbers are coming up on your screens. 478 odd crores is what you've got in terms of the profit number.
485
revenue is about 3,390 odd crores.
It's very low.
Was much higher. I think revenue estimate was closer to about 4,480. So that's a big drop in terms of their top line performance. And net profit also. Net profit is though come in slightly higher than street expectation, Bloomberg estimates. So I mean there has to be some other variable to watch out for from Cipla. But the stock is. You should pull up the stock, whether it's reacting to these numbers or no. So there is a marginal correction. Stock was up about 3% but it's holding tight. There's not much of a reaction to the stock, at least for now.
Yeah, waiting for the EBITDA numbers. The expectation, as I see, what Darshan pointed out, was that EBITDA would be about 932 crores and the margins would be 20.8%. So waiting for those numbers to come out. But prima facie, well, the bottom line looks okay. The top line is certainly well and truly below estimate.
The base quarter had higher other income of about 170 crore, and this quarter I think the other income is at about 78 crore. Yep, the profit figures is at 470, and I think 485 is what our estimate was also throwing about. So it's just round about the same, in line with the street estimates, but definitely a base quarter was boosted because of higher other income of about 170 crore as well. We'll wait back for the margins though.
Yeah, margins, and more importantly, even aside of that other income bit, which would have impact on the bottom line, the fact that the top line miss has been so lower, when the expectations were 4,470, definitely is a bit to be desired. The stock is holding out for now, but the prima facie numbers don't look all that great. Siddharth Khimka of Motilal Oswal is with us. I don't know how closely it tracks Cipla, but Siddharth, let me just throw this out of the dark at you. I have two basic numbers right now for Cipla. The net profit at 478 crores and the revenues is sub 4,000, 3,989 crores. What do you make of the numbers, and can these numbers dent the stock? For now, it is not denting the stock.
If we were going by a number of almost 4,500 crores of top line for the first quarter, so that's a big miss on the top line to start with. I have not gone through the detailed numbers, but on the headline it definitely looks like a big miss.
All right. Just quickly looking at some other comparative numbers. So while we looked at the revenue numbers, just taking a look at EBITDA numbers for quarter one at 726 crores versus 904 crores, and margins have come in lower at 18.44%.
Yeah, but I think the margins have come in at 22%, if I'm not wrong.
I'm sorry, 18.44 was the previous last year's same quarter.
This is the operational performance, I think, Devina, which is highlighting that stock 4% up now because the EBITDA margins are at 22%. Now, maybe that is one thing which is driving the stock up, because the operational performance is very, very strong seemingly. 5% up now for a Cipla, and it's spiking on the back of those margins. These moves, remember, are usually not very sustainable, but for now, the margin picture is certainly showing the stock in good light right now. T.S. Harihar Johnson as well with his thoughts. Hari, if you track Cipla closely, the margin performance 22.7%, the estimates were 20.8%. Does this give you enough reason to go out and think of Cipla as a stock to invest in?
Yes, I think Cipla has been a fairly underpriced stock within the pharma space, and over the last 2 years they've been embarking on some very interesting cost control measures, and I think that's probably what is showing up in the margins in this particular quarter. Even otherwise, we do see a lot of defensive buying coming into pharma, with almost everything seeming to be so uncertain about banks and autos and metals. There is a lot of, I think, safe defensive money that is moving into pharma. So from that perspective, I would believe yes, Cipla could be a good bet. Also because Cipla has got a fairly large India franchise, and so they are less vulnerable to these FDAs and other kind of global issues. I think in the pharma space, Cipla actually could be a fairly good long-term bet.
All right. Ranveer Singh, research analyst at Idbi Capital, is also joining us on the phone line. Ranveer, just for your benefit, I just want to quickly highlight Cipla's numbers again before I get your comments on it. So the revenue has seen a marginal uptick of 1.2% at 3,989. You've seen EBITDA grow by 24% at 904, but the EBITDA margin has been a surprise beat, 22.7% on the EBITDA margin front. How did you, how did you read into these numbers? Ranveer, can you hear me? All right, I don't think Ranveer can hear me right now, so we'll try and patch that line with him yet again. But the stock price has come off, I think, from the highs. I think it's gone up almost 5%, and now it's back down to about 3.9%.
Yeah, Manav, you want to take a trade on Cipla, 4% higher?
See, at the current levels, definitely not. I think, we will let the prices settle down in terms of volatility. But yes, for a short-term positional, the important levels to look out is 530 to 525 on the upside. So in case if there is a breakout above this zone and we are seeing a closing of this, I think definitely there could be some sort of a good momentum or a positive move that could come out. And one important thing, Neeraj, that the stock is bouncing from its weekly and monthly support, so that is a further confluence in the overall parameters. So at the point, I will definitely want to look this stock with a positive bias rather than a negative bias, since most of the clusters are hinting for a bullish upside momentum.
Okay, that's Cipla reacting to its numbers. Margins are higher on year-on-year basis. We'll wait by for more details to come in with regards to if there is any sort of adjustment with the new accounting norms as well. But just marking few more numbers which came during the day. And Pula Voltas, I believe it's recovered from the low point of the day. It's still sitting with some bit of cuts. The revenues were up 24%, which were higher than what the street was estimating this time around. And the company managed to maintain their margins at about 11%. EBITDA was up about 20%, but the bottom line was down about 10% at 165, which was way below what the street was expecting this time around. Mr. Hari, if you got a chance to look at Voltas numbers, what did you make of them?
Well, see, we have been a little cautious in Voltas for quite some time, because I think they've been facing pressure on the AC business, on the consumer white goods business. The stock has also seen a very rapid run. If you look at it between 2015 and 2018, I think the stock had about 300 or 400% kind of a rally. So I think we tend to be a little cautious. And I know, as I've again been saying, if we are looking at this particular consumer electrical space, we would still prefer something like a Havells over Voltas at this point of time.
But Havells numbers were also not so good this time around.
Yes, I think they had some issues on the consumer front, largely because construction sector was a little tepid. So I think the transformer segment had a very slow growth in this quarter.
Right, but on the flip side, if you have to take a look at Polycab numbers, they were much in the same space probably. They outdid what they did last quarter. The apprehension for the first time that they reported the numbers, which was a down quarter, and they recovered from that pretty well this quarter.
Slightly different business, because I think they're more of cables, whereas Havells or I would say Voltas would be a much larger franchise as far as the electrical goods is concerned. But yes, I think Polycab was, I would say, a positive surprise, although I'm not sure whether it's sustainable, but definitely I think it's been a positive surprise.
What else are you watching from the market standpoint, Hari, now?
See, hard to say, no, but we are very keenly watching some of the autos that have corrected, and largely I'm talking about the passenger plays, the likes of Eicher, the likes of Maruti, which have given a 35-40% correction from the peak levels, and I think at these levels they're looking very attractive from a slightly longer term perspective. Maybe not I wouldn't say a trade or a short term trade, but if you have the patience to buy Maruti at a 5,200 or a Eicher at 16,000 and wait, I think these are the stocks to kind of watch out for. Because finally, I think the what I call the irrationality of pricing is getting out of all these stocks, and we're getting them at more sane levels. So hopefully 1 year down the line, I think growth should come back, demand should pick up, and I think these stocks should be a lot more better priced than the current levels.
What about Mahindra and Mahindra? The numbers were on the weak side and the commentary on the PV side was not so good. Of course, the farm equipment side continues to witness a degrowth.
I think M&M is in fact, if you look at the last 2 or 3 quarters, I think the farm equipment space has been under pressure, be it tractors, be it any of the threshers or any of the farm equipment. It has been under pressure because rural demand has taken a big hit. So if you look at even the two-wheelers demand, which is predominantly a rural proxy, I think that is where the real pressure has come from. And I think with the weak agricultural incomes, tight credit, NBFCs not having liquidity, my belief is that M&M kind of stocks are best we stay away from.
All right, I think we just take a look at the bank Nifty. I mean, that's now sub 27, it's at 27,735. So there's been a sharp drop that's come in the Nifty Bank, down almost 1% now at the lowest point of the day. So once again, dragging the index lower, and we're sub 10,900. We started the show somewhere closer to 10,910, now at about 10,863. You could just have the MRR function of the Nifty Bank to see where the drag is coming in from, and also on the Nifty 50, while you're actually seeing most of pain building up in some of the non-heavy weighted stocks, but still the banks, Reliance Industries is down about 1.5% right now. L&T is down 1.5%. That's the MRR function of the Nifty Bank. So Sans Yes Bank and an IndusInd Bank, everything else is seeing a sharp correction. Rbl Bank in particular, along with Bank of Baroda at the bottom.
I think we spoke to Siddharth Khemka about RBL Bank, did we? Siddharth, I don't quite remember, but if we haven't, just wondering, what do you do here? Because this bank seems to be having these peculiar problems. They're guided on some worsening of asset quality, but, well, the current book value as we see it, price to adjusted book, has shrunk from what it used to be, 3.5, 3.6, or maybe slightly lower than that, to maybe what, 2 times currently?
Yeah, so if you see what is happening is because of the overall market sentiments, people have been punishing companies which are unlikely to report good numbers in the near term. And quite frankly, RBL has come out and said that the next 2 quarters are going to be increasing in pressure in terms of slippages, NPAs, and to that extent they have guided for the GNPAs from 1.5% to moving on to 2.5% by end of the year. So in this scenario, definitely where the credit growth in the industry is coming down for a bank like RBL, which generally has exposure to a lot of these mid corporates, and that is where the current pressure is. So growth definitely looks to have come down from what it was earlier, and with the higher pressure on the asset quality, the valuations definitely has come down. I think with our numbers that we are looking at, it has for this year, it is FY20, the adjusted book value, price to book value comes to somewhere around 2 times in the current price.
Mahindra is talking. Let's cut across to the M&M AGM.
Of various other committees. Mr. Puri joined the board in 2001. He's been a member of the Strategic Investment Committee. The board has enjoyed the enormous benefit of their financial acumen and their wise counsel. They've added tremendous value to your company over the years, and we owe them our deepest gratitude. So I'd like to place on record the board's deep appreciation of the valuable services rendered by Mr. Kulkarni and Mr. Puri during their tenure as directors of the company. And on behalf of all of us, I'd like to wish them the very best and give them a small bouquet as a token of our appreciation. Ravi?
Okay. Well, I think Anand Mahindra's commentary on what the auto sector and the tractor sector and rural India might be going through will be very, very important. So we will cut back to it as soon as he starts talking about that. But amidst all this news of stocks which are correcting, there are some stocks which are doing well. Let's find out what's made it to Sharad Dubey's list of the Fab 4 stocks of this afternoon. Sharad, good afternoon.
Good afternoon, Neeraj. The first stock is Central Bank of India, which is up almost 14%, its highest in a month after it reported its quarterly numbers. So if you see, the net interest income rose by almost 7%, but the bank came out with a net profit of 180 crore rupees against the net losses seen in the corresponding quarters. Up next, we are having Z, which is up almost 6.6% after snapping its 7-day losing streak, and the volumes trading at 2 times its 20-day average. Up next, we are having Lupin, which is up almost 4% after it came out with its quarterly set of numbers, with EBITDA rising by 63% and the net profit rising almost 50% at around 303 crore rupees. Even the margins expanded to 19.5% versus 13.7% on a year-on-year basis. And the last stock of the day we are having is Arvind, which is up almost 4.5%, seeing its biggest intraday gain in almost 3 years, as well as fresh longs being seen with a high open interest of almost 12%. Back to you.
All right, Sharad, thanks very much for that. In fact, I just want to, come to you, Gaurav, on what this Manav, I'm sorry, on J&K Bank and Central Bank of India. These two stocks up and active yesterday as well as today. How would you trade them?
See, both these banks, they are trading at, like for example, Central Bank has just given a bounce after a series of decline, and the overall structure for Central Bank is extremely poor. It's in fact, it has also in the past witnessed this short-term trading bounce, but eventually things have not materialized in terms of price. We haven't seen any follow-on move, and this could be the similar situation at the current point. So my simple analysis would be, at such a scenario, one should not look for a falling knife kind of a stock in such phase, but look, a stock like SBI or a safer PSU bet could be something that one can definitely analyze, because they are still in a positive structure trend. And so my simple thing would be, one should definitely avoid getting into this stock. Could be a short-term trading bounce, but one should not definitely get into it, as the upside is limited but downside is still open for these stocks till now.
Let's cut back across to the M&M AGM, where Anand Mahindra is now addressing about the quarter.
Sectors in which we operate. And looking at it from a comparative perspective, in the three-wheeler segment, the industry degrew 7% and we only degrew 2.4%. In commercial vehicles, we were slightly better than the industry. We only degrew by about 9.4% versus 9.5%. And in passenger vehicles, while the industry degrew 18%, we degrew less than 2%. But let me now share my thoughts on the current market circumstances. And I'll start with very brief comments on the tractor industry. Although the industry has been facing challenges thus far, as you all know very well, in Mumbai, we've been experiencing the full bounty of the monsoon rains, especially here. And this, teamed with the forecast of normalization of rain in August and September, that really makes me hopeful that there could very well be an uptick in agriculture and the tractor industry. But beyond this very brief comment on the tractor business, I want to really focus the rest of my time on sharing my perspective on the auto industry, where there's been a lot of talk, as you know, about a slowdown. Now, there is what they call a tectonic shift in the industry, and I think the time is ripe for that kind of shift. And I don't see why it should come as a surprise to us that the government is putting all its weight behind the introduction of electric vehicles. I was a speaker at the MOVE Summit in Delhi in September 2018, where the Prime Minister shared what I thought was a bold, well thought out, and holistic vision for the future of mobility, and he publicly committed to it. I do know that he personally lays great store by this future of electric mobility. It was heartening for me to see a government that was not conducting what is called business as usual, but was really propelling us towards an envisioned future that should really improve all our lives. And frankly, that kind of thinking was fully in sync with the thinking in the Mahindra Group. And we are fully on board with that line of thinking. Because who could quarrel with a vision for a mobility system that is gentler on the planet? Who could quarrel with a system that frees us from the dependence on expensive imported fossil fuels? And who amongst us can decry the move towards shared mobility, preferably shared electric mobility? I don't think anyone can, and certainly not us in the Mahindra Group, because we're the pioneers of electric vehicles in India. But I must tell you, people really think that we first got into electric vehicles with the acquisition of Rewa, the Bangalore-based Rewa, in 2010. But let me tell you, Mahindra made the first electric three-wheeler christened Bijli 20 years ago, in 1999. And I'm delighted I have here, I can see members of the project team. Of course, we were all much younger then, but I see Prochi and Florette then. They're sitting here. They were the members of the original team that in 1999 made India's first electric three-wheeler.
Well, a lot more on the electric industry, but I think he mentioned that he sounds hopeful because of the monsoons that the tractor industry will revive. Well,
but just look at the stock price.
Yeah, the stock has really corrected today, 6%. And on top of that, by the way, Escorts is trading very close to 52-week lows as well. So maybe there's a forthcoming revival, but for now, the tractor industry is not pricing that in. Siddharth Khemka, would you go out and buy into the tractor companies? I'm classifying M&M also right now as predominantly the tractor company. So either M&M or Escorts. Do you have a buy call there?
Yeah, M&M we do have a buy call there, but that is largely because of the overall portfolio and the current valuation that it is trading at. The outlook for tractors have not been very clear. We know how dependent they are on the monsoon and the rural agri segment, and to that extent, yes, the last few days of monsoon has lowered the deficit to a large extent. We are now somewhere about 6-7% deficit, and that raises some hopes of a better demand environment. However, there are several challenges for the auto business. One is the Bs6 transition, where especially for M&M, where a lot of their UVs are in the diesel platform, and they need to transition to the Bs6, which will be a big challenge for them. On the core business, the growth is something that is not very encouraging, at least the view that is right now. So one, if we're to look at from a longer term perspective, M&M could be a preferred bet to play the tractor segment. This year, however, not very clean in terms of how the growth will pan out.
Okay, some more corrections, by the way, and Ruchit Jain's views out here would be appreciated. Indiabulls Housing Finance is now down 14%. And remember, we got clean calls on metals in the morning. They started off weak, and then people said that go out and short them even at those levels. From there, Tata Steel is corrected another 3.5%. So it started off 1.5% lower, another 3.5% lower. So metals certainly looking very, very weak. Even the good news in Novelis has failed to cheer Hindalco at all. Before we get in some investment ideas, a couple of trading ideas and some closing strategies. Ruchit, to you first. What is the best metal name to go short on right now?
So I think if we do some relative strength analysis amongst all the names, so Jindal Steel is one name which has been an underperformer. Secondly, if we look at the positional charts, nearer than 120, 124 was the very strong support range for Jindal Steel, which was formed in the month of February 2019. Now that support has been breached. Also, if we look at the volumes in the sell-off, then the volumes are very high. And I think if the metals continue to underperform, then I won't be surprised to see Jindal Steel even going down towards 85, 88 kind of levels. So even at current levels, if you ask me any name to go short on, then I would recommend going short on Jindal Steel at current levels with stop loss above 108, 108.50 and expect target around 88 rupees in near term.
Okay, JSPL is down about 11%. That's at 101 now. Hari, you want to comment on metals?
No, our favorite short has been Vedanta for quite some time because we see a lot of things going against Vedanta. Number one, we have this global metal prices going down. Chinese demand has been weak. Chinese growth has been faltering. And above all, I think Vedanta has been contributing with its own corporate governance problems. So very clearly, we are looking at Vedanta shorting right up to 100. So we probably look at a bounce in Vedanta only from about 100 levels. As of now, we continue to remain short in Vedanta.
What would you do with the Coal India? I mean, this particular stock, I mean, I don't think it falters on many counts. Return ratios, earnings performance, productions have been going up. Pricing, obviously, that keeps on varying. But is this a stock that you think someone should likely have in their portfolio?
Yeah, if you're a dividend yield investor, then yes, you should have Coal India. But otherwise, if you're looking at growth, I don't think you're ever going to get any kind of growth on Coal India because, see, ultimately it's a dying commodity. At some point, I think nobody is going to want coal any longer. It may be 10 years, it may be 15 years. Second thing is, despite all the output that Coal India shows, we are still a coal short economy. We are still depending extensively on imported coal. And again, Coal India produces quality of coal that is of very low calorific value, which is not useful for most industries. So I think other than thermal power, which is the largest demand sector for coal, I don't think Coal India really contributes much to the other segments. So unless you're a dividend yield investor, then yes. Otherwise, I don't think Coal India makes sense in your portfolio.
Okay, last 1 year it's down 25%, but as Hari mentioned, if you like dividend yield play, I think Coal India gives you around 7 to 8% dividend yield. But let's get you some closing strategies from our technical experts. Just 10 minutes to go for markets to close. And Manav and Richard, we are at day's low now, 10,850 almost on Nifty, and Bank Nifty is down about 1%. What's the closing strategy? Any BTST or any STBT for tomorrow? Manav, that's for you.
Okay, so my first call would be a sell on Hindalco. Basically, metals as a space has been quite weak and it has breached its important 60-minute support on the intraday charts, and I sense the momentum still remains weak as long as the stock is trading below the levels of 182. So that could be the stop loss on the immediate basis, and we expect lower targets into this stock, which gives us a lower targets of 168. And the other stock that is weak is Equitas at the current zone. That is my second STBT call. In fact, we've seen a short-term retracement rally that came into the stock yesterday, and again from the levels of 109, 1010, the stock is again facing a series of resistance. So on the upside, a stop loss of 109, and we can expect lower targets of 94.
Okay, so 2 STBTs coming from Manav. Richard, what about you? Your closing strategy?
As far as index levels are concerned, we have seen that this range of 10,780, 10,850 has been a very strong support, and we have corrected today again back to that range. So I won't take any fresh short trades as of now until we see again a breakdown below 10,780. But on the long side, yes, HUL has been an outperformer in today's trading session. Also last 4-5 trading sessions, if we see, the stock has managed to give a breakout above its immediate resistance of 1760. So keeping a stop loss below 1750, I would recommend going long on HUL for target around 1800.
Okay, that's the stock there, up about 1.85%. The other pocket obviously is IT as a space. Now Hcl Tech is expected to report its numbers today, post-market hours, and the stock ahead of that was doing well in early morning trade, but I think with the rest of the market sentiment dipping, that stock too has borne the brunt of it. So 1026 is where Hcl Tech is currently trading at, but no great fireworks expected from Hcl Tech, almost in line with what the rest of the other bigger names have done. And obviously the integration with IBM is something that is going to be an important watch from Hcl Tech point of view. Hari.
Yes, I think the whole issue is in this kind of a market, your results are not going to really matter, because we've already seen, I would say, fairly reasonable results from Infosys, not so reasonable one from TCS. Hcl Tech has a slightly lower ratio as far as the digital business is concerned. So I think their margins have always been traditionally lower. So also has their operating margins been lower than TCS. But I would believe that the valuation discount that they've typically commanded, I think that should kind of continue. And although the growth should be, I think, on target, I would believe that not much of a difference is likely to make in the prices.
Okay, Hari, we'll leave it at that note. Thanks a lot for joining us. Siddharth, closing thoughts from you. Once again, there's a pullback from the recovery that we had seen. Nifty, even the broader markets are off the day's low. Where are you finding value? Is there any fundamental pick that you want to share with our viewers?
Yes, so there are some ideas that we are working with. We attended the first Investors Day for AU Bank, one of the small finance bank, which has been doing well in this current environment. Unlike some of the others which are struggling, the entire management was there and they presented their strategy into how they plan to become a universal bank by 2022. So if you see the Q1 numbers were very good, strong growth. The management is expecting 35-40% AUM CAGR to reach almost $10 billion by 2022. It is also targeting almost 80% of the funds to be collected from deposits. So that kind of business model they are looking at. We are expecting of almost 43% earnings CAGR over the next 2 years. Although valuations are a little bit on the higher side, we believe that such kind of high growth should command such kind of premium valuation. We believe the target price would be around 760, which gives another upside of 20% from current levels. Another idea that we are looking at is in the cement space. We have seen a lot of companies have come out with results where they have shown a sharp improvement in EBITDA. One on the back of higher realization and two on back of operational improvement. So JK Cement is a mid-cap company which again reported results recently, came out with good set of numbers. The good part for the business is that the white cement business is something that has been contributing very strongly to JK Cement. It's among the two larger companies in India which is present in the white cement space. So with bulk of the capacity expansion now done, we believe that growth from here should be largely stable with a comfortable valuation. So we believe that almost 40-45% of the market share for JK Cement is in the white cement is with JK. That gives us some comfort. Again, a stock where we see that from a 1 year perspective can give another 20% upside from current levels.
All right, Siddharth, we'll let you go on that note. Thank you so very much for joining us this afternoon. Ruchit, I want to quickly get your view on Radico Khaitan and Kansai Nerolac. Both of these stocks have done really well over the last 1 week.
So Radico Khaitan, I would take this up move as just a pullback move within a downtrend until the stock gives a closing about 330, 335. I would recommend to avoid taking fresh longs. The prices have already seen a pullback move from 270 in last few trading sessions. Yes, the overall paint space has been showing an outperformance and Kansai Nerolac has given a breakout from a falling trendline resistance today. So I think this seems more interesting and we could see targets around 490, 495 in next few sessions.
Lupin is the other one now, up 4% after its results. Manav Chopra, quickly a word on Lupin.
Yes, in fact, the stock has been in a sideways trading band, having upside resistance around the levels of 780 and the lower support around 740. So it's definitely trading near its upside resistance zone, and the kind of reversal that we've seen today with volumes, it's definitely hinting for some sort of a positive upside breakout. So looking at the structure, we can definitely anticipate this breakout to happen on the upside, and once if the prices are closed above 780 levels, which is currently trading at, the prices does give an upside targets of close to 810 to 835. So keeping that point of view, one can initiate long positions, keep a stop loss of 760 on closing basis on the lower side.
Okay, gentlemen, we'll just take in closing thoughts from you. Just stay on. Let's just wrap the markets because less than 3 minutes left for the markets to shut shop. It's not turned out to be a great day. Almost all of the gains that we were making yesterday have been swept away, even on the Nifty Bank, really. Maybe more than that on the benchmark indices. So 10845 points lower, over 300 points for the Sensex and over 300 points for the Nifty Bank. The market bit seemed positive at the start of the show, which is an hour and a half ago. But let's get the mid cap and the small cap indices now. My guess is that it would have converged or maybe moved for the worse as well. We'll talk about that. But not looking all that great today. The close, quite unlike what happened yesterday. Everybody's hopeful. There was a slew of measures being announced and maybe China also taking a bit of a back seat. Would a step back, maybe things would improve. Don't look like. Let's talk about the large caps first and what's moving and what's not. Not too many gainers, as you can see. I mean, the number might be there, but hardly any stocks which have some meaty gains. Cipla, Z was up 5% or 7% at a point of time, just about 2%. What volatility intraday? Yes Bank, HUL, Hero MotoCorp, a few names which are trading in the green, and Coal India continues from where it left off yesterday. But aside of that, the other metal stocks have been clobbered, and let's get to the losers, and you will see that. Indiabulls Housing up 7% yesterday, down 14% today. Mahindra & Mahindra post numbers 6%. I reckon this is fresh 52-week lows. Tata Steel, Tata Motors, commodities are taking it on the chin with Tata Steel, BPCL, Vedanta, Grasim, etc. all down. And iShares, which are showing some bit of an uptick too, has been pulled down. JSW Steel 3% lower at fresh 52-week lows. So essentially commodities, but autos have participated on the downside with iShares, Tata Motors and Mahindra right up there in the top 10 losers. And Indiabulls Housing Finance, actually even Diwan Housing, even a Yes Bank, all of them getting punished today. Now, what about the broader end of the spectrum? Has the breadth converged?
It has actually, Neeraj. Every pullback is being used as an opportunity to sell in this sort of market. I'll still start off with a couple of gainers. Lupin came out with the numbers, so earnings reaction on the upside. Revenues were up 14%. The profits went up by almost 49%, and we did see some bit of margin expansion. The stock's closing with gains about 3.5%. From the ID pack, you had Mindtree, which had a good day today, and not only today. I think the stock's been moving higher in the last 4 trading sessions, so bucking the trend as opposed to what's happening with the markets. 5% higher from Mindtree, and Krishna Industries will be reporting its earnings on Friday. Ahead of that, we did see some bit of positive momentum in the stock. 720 is where Krishna is closing. But on the losing side, there are a whole host of losers. Today was the monetary policy, and post that, we did see some bit of selling pressure for most of these PSU banking stocks. So Bank of Baroda, Punjab National Bank, both of them slumped today. BOB down almost 6.5%, and PNB closing at day's low with cuts of 5%. And the private banking space was also weak, and one of them was Rbl Bank. The stock's been corrected post the cautious commentary which came in post its numbers, where management highlighted that the credit cost for the entire year could go up by almost 35 to 40 basis points. Motherson Sumi, by the way, the stock became 2-digit today. It's been touching fresh 52-week low almost every single day. 5% lower, closing at day's low 96.9. Ashok Leyland from the auto pack was weak. In fact, the entire pack saw selling pressure. These are a couple of stocks where some bit of volume was also on the higher side. So 3% lower for this one. Cummins came out with the numbers. Profits were down 17%. There was margin contraction of nearly 400 basis points seen. 3% lower for this one. And JSPL down 40% so far for the year. Touched its 52-week low, closing at day's low with cuts of 14%. Parag Milk also touching 52-week low. That stock slumped almost 11% in trade. And finally, D-Mart, there was news of promoters selling 1% in order to comply with SEBI guidelines. Such last half an hour, when the markets weakened, you saw selling pressure for Avenue Supermarts as well.
That's what you've got in terms of the close for today. Quite contrary to the start of the trading session, but as we've said, the structure continues to remain weak. And as per our conversation with most of our technical experts, any of these bounces that we saw, like the one that we saw yesterday, should actually be used to sell back into the market. So that's what you've got in terms of the Bank Nifty close. 359 points given up. Nifty 50 is seeing a cut of about 109 odd points. So under 10, comfortably under 10,900, which we had started off during the start of the show. And coming to the contributors then, just quickly looking at how it shaped up out there. Reliance Industries 1.5 to almost 1.7% under, 20 points shaved off. SBI, ITC amongst the bigger losers. Banks causing the major drag. A handful of stocks supporting the index, HCL being one of the top supporters.
That's right. And with markets falling, you also had India Volatility Index, which went up in the second half of the session after cooling off yesterday. So closing at day's high with gains of about nearly 5%. In terms of market participation, ahead of weekly options expiry tomorrow, you had the NSE F&O turnover at 15.3 lakh crore, which was on the higher side, and NSE cash, I think it's been in that range for the week at about 33,570 crores.
All right, quickly getting some closing comments from our experts then. And Manav, start off with you. Come tomorrow, it's the weekly options expiry as well. So what is the crucial level to watch out for?
See, at the current zone for Nifty, 10,800 is the important support and the resistance at 10,900. We don't see Nifty to expire above 10,900 levels, and looking at the momentum that we've seen today, there has been a significant amount of open interest built up also in 10,900 calls. So that definitely hints for some strong resistance for the markets, at least on for the expiry tomorrow. And going forward, if 10,800 is breached, I think there could be another short-term decline towards 10,650 or 700 levels. But one important thing is that any short-term trading bounce and somebody wants to play, I think one should actually wait for a closing above 10,900 or 11,000 levels to give that comforting zone for at least for a short-term trend reversal. Till then, I think one should not get into any trading for at least for a short-term basis unless there is a bullish breakout that happens on the upside.
Okay. What about you, Ruchit?
I think we would see some consolidation in this range of 10,780 to 11,000 in near term. 10,780 would be the crucial support to watch, and in case if we break below this level, then it would mean that the markets have resumed its short-term downtrend which has been seen in last couple of weeks. On the high side, 11,000 call option has the highest amount of open interest, which continues to be a resistance. Yesterday and today, 2 trading sessions, we have seen that the index is not able to surpass that resistance. So these are the 2 levels that one should crucial watch for from a short-term perspective: 11,000 on the high side and 10,780 on the low side.
Okay, gentlemen, we'll leave it at that. Thank you so much, Manav as well as Ruchit. Appreciate you both taking out the time.
Yeah, thank you.
And on that note, it's a wrap on Countdown. Thanks a lot for watching. From Neeraj, Navneet, myself and the entire team, let's put this show together. Coming up next is the Market Wrap.